Welcome to the TFG Aftershow, where our goal is to take you deeper into the things that we do to help people at the Financial Guys offices. We like to take a deeper look into our key people. If you need us throughout the week, folks, please call 833-FIN-GUYS. I'm Mike Hayflick, along with my co-host, Mike Sperrazza. Today, we'll spend some time with our lead life insurance specialist, a man whose career started in 1980. He's still going strong today, folks, as he continues to help hundreds of people every year. And he also mentors others like me to understand these complexities of life insurance. You might think it's simple. Let me tell you, it is not. It is not a one-size-fits-all thing. It is definitely something you should take seriously from early stages of your life all the way into your later years. So with that, to launch our life insurance department month of September, we have Charlie Sperrazza with us today. Charlie, thanks for joining us.
Hey, thanks for having me on the show. I appreciate it.
Yeah, I think it's going to be really, really helpful for everyone who's listening because, life insurance is one of these things. There's so many commercials. There's so many advertisements for it. And I think a lot of people, it's almost like you become numb to it. And I know a lot of my clients will often say, you know what, we got enough wealth. We got plenty. I don't think we need this life insurance. We don't need it anymore. We're just going to let policies lapse. And I always hesitate, and I often will then think of you and many of the things you'll talk about in terms of the features of life insurance. So we're really happy to have you here. I guess to just start, what is the earliest age that people should consider getting life insurance?
Mike, it's a good question. And if you think about it, it's like, when is a good age do I start putting money away? The earlier, the better, right? You're just putting a small number away to get a larger end result. Well, with insurance, it's similar because the cost is far less at a younger age. Look, whether I need it right now at 20, I may not. However, going forward, I may decide to get married and have a family. I'll need it then. And a lot of times, once the family started, the disposable dollars begin to shrink. So if you've already got something in place, it's going to be kind of helpful as well. Worst case scenario, let's say you never want to get married, you never want to have a family, you could do it from a greed mode and just put the money away because it will accumulate over time as a tax-free benefit to you later.
Okay, so some policies will actually have that feature. Can you give us a little insight on that? Because I know I've sold policies to people, for instance, like a 10-year term policy. Just because those are maybe the vulnerable years for a couple because there's still a big mortgage to pay off and they don't want to put each other at risk. So, for instance, a woman might take out a $200,000 policy for 10 years, but after that 10 years, it's over. Well, tell us about the other kinds of policies that are out there besides term life insurance.
While you're on that topic, term, just so you know, between the ages of 36 and 49, the average mortgage out there is $209,000. And generally, they spread them out over 30 years. So that's another piece that you look at. But that is designed, the bet on term is you're going to die within that period of time. That's the bet. Okay? Now, if you want to challenge that, it might be a good idea because who knows better than the people that create the target, the premium itself, right? The actuary.
Right.
On the other, if you bet you're going to live, you might be wiser to buy the policies that are now the internal cash values are invested in the S&P 500. Let's say it's indexed, so you don't experience a negative number, only a positive number. Your worst case scenario would be 0. So let's say the S&P went negative 10, you get 0. If it went 20, you might get 8.5 or 9. But remembering that's not only tax deferred on the way while it's building, on the way out, it can be tax free as well.
Wow. So yeah. So I'm sorry. So so it's not just a policy then that will help the beneficiary of the policy, but it could also actually help you, the policy owner, the actual insured.
Correct.
Awesome.
Twofold.
Nice.
So, as I always talk about dusting off old policies and taking a look and shopping around again, does life insurance work that same way where you can, shop older policies or find better deals down the road like we do on a daily basis? I mean, there's not a week that goes by where we don't shop around people that have been insured for 10, 20, 30 years, and we end up finding them a way better deal.
That has multiple answers, but I want to give you a good example right now why you need to look at certain things. We have an individual right now. He's on Social Security disability, And by chance, I was working on something else. I said, let me see the life insurance. And within his life insurance contract, he had what's known as waiver of premium, where they waive the premium. He doesn't have to pay it anymore. He didn't know it. Nobody contacted him on it. We've just put him on. Now they gave him back the last 6 months, and they're going to waive all future premiums. That's another reason to take a look at what benefits you have and which ones are still working for you or you still need, number one. Number two, sometimes the need changes. What I needed 10 years ago, I need something different today. So to review, it makes sense to dust them off, especially the older ones don't have a lot of the newer riders. Like if you had a need for long-term care in your home or in the nursing home, the newer policies have those riders attached to them. So it might be something you might want to look into as well.
Let me ask you this, Charlie. A lot of times we'll ask people to get those policies out, like we do with the auto and home policies. I mean, I know you helped me tremendously on our home and auto and an umbrella liability policy. And getting those policies out, sometimes you look at those and you see all the original kind of, verbiage about the policy, and literally the papers might even be yellowed because they're so old. What's the best way to really make sense of that? Because these policies over the years must change. I mean, new products come out all the time. So what's the best way for people to really get a sense of how viable those contracts are?
Whether it's term or whether it's permanent coverage, what you really want to do is call that carrier. Sometimes I do it with the client. We call the carrier and we get what's known as an in-force. So we can look at where the value is right now, where it's going, if it's term insurance, where the premium is going, how much longer is left. And that kind of helps us to guide whether it's time to make a change or not. So that's important to get an in-force illustration before you make any adjustments.
Yeah. So an in-force illustration. So the idea is this policy is still in force. It's still active, so to speak. And they'll give you a kind of like almost like I'm thinking of blood work. You go get blood work to see how am I right now? What is it showing about myself, my health, and all that. So that's essentially what you're saying.
It'll give you a current synopsis of the current values, both internally and the death benefit where they are.
Nice.
Yeah.
Awesome. I know that sometimes people think that, life insurance is pretty simple. It's just, it's term, right? Term is probably one of the more popular ways, I guess. But then you can get into the idea of guaranteed policies, no matter what age you die. And then you mentioned the idea of cash value. Can you go into some of the detail about how the people who might say to me, listen, I've got all sorts of wealth. We don't need life insurance. Look, I got $2, $3, $5 million. Well, I don't need life insurance. Give us some ideas for those people that have the higher net worth, accredited investors. Why might they still consider life insurance, even if they have that kind of what they don't see as a need?
Well, I'll give you another example. We just closed a deal yesterday. Client's net worth is about $20 million, which simply means that when one of them dies, there'll be no tax due. But when the next one dies, it goes out to their children. They're going to have a tax bill of somewhere in the neighborhood of 45% of anything over $11 million currently. Now, that may seem like a large number, but that number's right now they're trying to whittle it down to about $3.5 million, which simply means everything over $3.5 million, you got to pay 45% tax on. The family does.
Holy cow.
Which is why the wealthy people always have large amounts of life insurance, even if that's not the case, because if everything else fails, the life insurance will replace what failed and perpetuate that family's wealth to the next.
Wow. I mean, we always talk about the idea. I always say to my clients, I know you'll spend your money far better than any government will. So federal, state, local, whatever. That's huge, 40 to 45%.
Well, and I was going to say too, is the Biden administration doing anything else other than that death tax issue to affect life insurance or the need for it?
They want to remove the stepped up value. So I bought a piece of property for $100. It's worth $2 million. Now, when it transfers on, they get the $2 million tag. They want to remove that stepped up value. So, like today, you can, if you had 100,000, you transfer to $2 million. Their value starts at $2 million, right?
Right.
But he wants to the tax between the 100,000 and the 2 million. This is just one of the ways that people are going to lose their wealth. If you've got life insurance, it's a tax-free benefit, number one. So if all else fails, you've got that, and you use that to pay the tax to maintain whatever investment, whether it's property, whether it's stocks, whatever it is, gold, you'll maintain that without having to sell it off. Because remember this, and even in the business market, when the partner dies in a business, one or two things happen. A lot of them do have buy and sell agreements, but they're not funded. So that means the surviving partner either has to take in the wife or spouse of the other partner or mortgage the business, and a lot of times they close up the business just because they were not prepared. So there's so much more to it than people see. It's not just you buy life, you die, everybody's happy. Or not so happy. But the reality is, if you plan right, again, I always say this, people don't plan on failing, they just fail to plan. And that's really the crux of it all. Here's another example. There's a stat out there that 35% of the Americans, when the breadwinner dies, within the first 30 days of death, they already start to feel the financial crunch. Why do you want to put your family in that position?
Wow.
For what reason? So
that's crazy. And I mean, it's already dreadfully hard to lose a loved one. So then to stack on all the stress of like, am I going to be able to make it? And then all the children, grandchildren having to maybe rally around that person. It's already so hard. Wow. And
until you see it, and I've seen it over 42 years. In fact, I'm more involved today than probably even 10 years ago. I'm deeper into this, and there's so much more out there. And I know I'm old. I get it. And I know people think, he's a relic. I run as fast as the guy starting out in the business, and faster even.
Yeah.
Because it's so important. And again, for your listeners and for the viewership, it's really important to dust everything off. You know what? Maybe you're going to come in, and maybe you're going to be fine. And we're going to tell you that too. And maybe you're not going to be fine. And here's what you need to do to correct it. So, again, it's really important to understand what it is you have.
Two things real quick. One, yes, you are old. There's no doubt about that. Number two, very similar to what I do on the home and auto side. You know, it's very hard for people to go online and shop by themselves and figure it out on their own. I mean, it's just that there's just too much that is involved in picking the right plan, picking the right coverage, whatever it may be. Can people do this easily alone? Just pick a dollar amount and say, that's what I think I want. And then, you know.
Oh, sure.
I know they actually can't, but I guess my point is that a smart approach to just do it on their own?
No, because I always say this. This is another study. 65% of the people that start to apply for life insurance online never complete the application. Something bogs them down. They get interrupted. The question is that they don't understand it. What does that mean? So they stop right there. Mm-hmm. You know, if you talk to a professional, it's not going to cost you any more to talk to me than to do it online, in fact. Because I'm going to give you I went dark. That's the line. That's the when you get advice, look, then I can direct you, and then you really have a full understanding of what the differences are between the contracts.
Yeah. This is awesome.
That's how people.
It's awesome information. I think of when people come to see me in the financial planning side, there's just so many things out there, and things are always changing. They just don't have the time, maybe not the interest either, to like invest in and make a commitment to making sure everything's just right. And so in our shop, of course, we always say we're a one-stop shop on the financial planning side, the home and auto, property and casualty side, on the life insurance side, health insurance. I mean, we do it all. So, I think this is just invaluable. I mean, now all of September is life insurance month. So we're basically focusing, folks, on life insurance this month. So why don't you too focus on life insurance? Make sure that you're good. Make sure that your loved ones would be okay. And as Charlie went into the details on, you can create tax-free wealth for yourself while you're alive. So let him look at some of the situations that you're in. Let's talk about what you've got. Charlie, last word?
Last word, smartest thing you could do is at least make the phone call and find out what you do have, what you think you have, and find out what you don't have. That's just a simple phone call. And that's really what you want to do.
I love it.
Help yourself.
Awesome. Thank you, Charlie Sperrazza, for joining us this week.
All right, but you got a little real echo here going on.
Get those lights back on. I don't think he paid his electric bill, guys. I think Mike and Glenn shut him down. But the computer still worked, so that's good.
Yeah.
All right.
On battery.
All right, just a few little public service announcements here, folks, before we wrap. Remember, we do serve the Western New York area as well as Rochester, Batavia, South Florida, out of our office in Jupiter. To reach us for any of your wealth management, retirement income needs, Social Security claiming type strategies, home and auto insurances, RVs, motorcycles, rental properties, you name it, anything that you can insure, talk to Mike Sperrazza and his team. Life insurance needs with Charlie Sperrazza and his growing, extremely competent team. Call us at 833-FIN-GUYS, or you can visit our website at thefinancialguys.com. And then one last thing, I'd like to also invite you to register from our website. Go to thefinancialguys.com under the Academy and Events tab, or you can call us at 833-FIN-GUYS. Social Security Optimization Workshop coming up Wednesday, September 22nd at 6:15 p.m. It's live at our 305 Spindrift office here in Williamsville. Ron Reinstein and me, Mike Hayflick, we're going to find out how you can make the best Social Security claiming decisions. If you're single, it's you and your spouse, this is not just simply a break-even analysis, folks, okay? That's the most simplistic way of thinking of how to claim your Social Security benefits. Go a step further. Let us show you how to optimize that wealth. Optimize that nest egg that you've probably spent decades accumulating. Let us help you figure this out. Pair up Social Security with maybe pensions and all the wealth you've accumulated. Again, Social Security Optimization, Wednesday, September 22nd, 6:15. Register from thefinancialguys.com under the Academy and Events tab, or call 833-FIN-GUYS. Anything else?
I think that's good.
I think we're good.
Nailed it there. There you go.
Your dad's not a bad guy.
No.
Yeah.
We got to make fun of him, though.
Yeah, a little bit. My kids make fun of me, so he's got to make fun of Charlie.
Can't
so
let him off easy.
I get it.
You got to give him a hard time.
This has been a great show, folks. For my co-host, Mike Sperrazza, I'm Mike Hayflick. Thanks for tuning in. Have a great weekend. We will be back again next time for the TFG After Show.